Hi guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're carrying on with our series of looking at ways to analyze the market so that you can create a formidable trading strategy. Now, do you remember that none of my videos constitute as financial advice? If you are looking for financial advice, please do speak to somebody that is certified and registered with the FSCA. We've already spoken about sentimental analysis, we spoke about fundamental analysis, and today we're getting into technical analysis. And this video is brought in partnership with ArcTerraFX. Now, ArcTerraFX is an international forex trading broker. So I want you to imagine you want to invest into cattle, cows, for instance, right? So we are currently in the month of August, going into September. Spring is starting to bloom, and perhaps maybe it's your birthday month and you are getting a bonus, like me. My birthday month in September, so if I was working full employment, there's some employment companies who would give me a bonus in my birthday, right? Now, of course, now I've got this big bonus and I want to put it into something. So let's say I decide, actually, I want to put my money into cattle, livestock, right? So I would need to ask myself, when do I want to buy and hold, or do I want to buy and trade these cattle? So let's assume I'm hoping to hold only up until December, and in December I want to sell. Now, to determine whether or not this is a good move, what I could potentially look at is the price history of cattle. So I could look at the price history. I could also look at factors within the market of cattle and see whether it's a good time to buy cattle. And if I want to let them go in December, will that be a good time? And will I actually make some sort of a profit, right? So then let's say I look at what's currently happening in the country. Well, we've just come out of winter. We know people are going to start imigidi and parties, and things are going to be great. And there may be slaughtering that happens. People may need cars for traditional rituals or cultural practices, or just for really just enjoying their meat, you know? So we know in December, mikiti there are many parties, many functions, many traditional functions, many events that are happening, you know, so, and it's summer, people are throwing all different types of events. So potentially the demand for cattle or the demand for livestock within the December period may really be higher. So, okay, that's a good start. The next thing that I would want to look at is the pricing. All right, so what price am I buying the cattle currently in? And because of this upward demand, this increased demand that we potentially could see in December, what does the price actually do of cattle? So I could look at last year's prices and look at what were the actual price movements between September to December, right? And that is what we call technical analysis. I'm basically analyzing the livestock market based on price. So if something happens, for instance, if let's say, for instance, there was a cow mouth disease or something like that once happened a couple of years ago. If there's a disease that is about to happen to the cattle or the cattle market, I would look at what did the price do? How did the price react to those types of news? And basically, I would then call myself a technical analyst, because I'm looking at prices, movements of prices, volumes, charts, and I'm basically using this to try and predict what the future price is going to look like of cattle, or what the future price movements of cattle could potentially look like. So, same thing happens when it comes to your forex trading. Forex traders, who are also called technical traders, when they use technical analysis, they use it to be able to plot down a forex trading strategy based on price and price movements. Of course, it's not divorced from the other ways in which you analyze, because as you may have noticed, there is a macroeconomic or an economic event that may need to happen for the prices to obviously change. We know that every day-to-day fluctuations of currencies happen, right? Based on economies, based on the volumes of supply and demand, based on currency fluctuations, based on volatility of the market. But in this, for instance, example that I used, we talked about the changing in events in terms of a social calendar of a country. Now, currencies also have different types of calendar months, interest rate day changes, for instance, an invasion of Ukraine by Russia. Those are events within the macroeconomic space that could potentially change the prices of currencies and actual fact have an effect on currency volatility and currency movements. So now, that's why I say that the analysis analyzing is not divorced from each other. However, the guys who do technical analysis, they're going to specifically look at the price movements, which is quite different from when you look at the stock market, because many people will say to you, in the stock market, past performance is not a guarantee of future performance. And I think it potentially is the same when it comes to Forex trading. However, a lot of Forex traders who use technical analysis will tell you that theoretically, all current market information is reflected in the price. Now, there's a saying in actual fact amongst technical traders that will say it's all in the charts. It's about reading the charts, and any type of movements will eventually start to show you a trend based on something that may happen. So, for instance, in South Africa, they increased the interest rate. You could look at past events where the interest rate got increased and look at what the South African rand then did when those changes were made or those interest rates were increased. Now, it's important to understand these things because, as I said, they work hand in hand. Have you ever heard the old adage that says history tends to repeat itself? Now, this is something that most technical analysts have anchored themselves upon. That if this happened, if things went up when this happened the last time, the high chances of the prices going up again, and the same thing, how the high chances of this event happening again and the prices behaving in the same way is quite high. Many technical traders will tell you it's not necessarily about trying to predict the future movements of a price, but they speak on the possibility of it happening. And the reason is that, as I've mentioned it earlier, is the patterns that one can start to see happen with price movements and price changes when a certain economic event actually happens. And to close off today's masterclass, it is important to remember that technical analysis is very subjective. Just because you read a chart a certain way and you look at the price movements a certain way and you find a pattern doesn't mean that Nicolette is also going to do the same thing. So it's important to understand that your strategy is very much hinged on the type of analysis that you are going to be doing when you look at the market, whether you're going to use fundamental analysis, whether you're going to use sentimental analysis or technical analysis, or actually a combination of all three. You may be then able to put together the strategy that works for you so that you can potentially place those trades that are going to give you success. I'll see you guys on the next one. And do remember, none of my videos constitute as financial advice. If you are looking for financial advice, please do speak to somebody that is certified and registered with the FSCA.